everybody, and welcome to part 2 of our Saving Grace Accounting Tutors Accounting Equation tutorial. In our first session, we went through a few transactions, and I'll just like to do a quick recap. So, in the first transaction, let's just go back quickly. They mentioned that T. Tom, who was the owner of the business, just one second, just go in there. Okay, so T. Tom had contributed 130,000 Rand into the business bank account. So I'll just like to do a quick refresher by saying that we said that 130,000 Rand would be deposited into the bank account of the business, and therefore that is why the 100,000 Rand went on the debit side, which is increasing the bank account, and the 130,000 Rand went on the credit side of our capital contribution account, which is an equity account. So just a quick recap, that bank is an asset and capital is equity, right? That was transaction 1. Okay, then transaction 2. Transaction 2 said that we acquired a loan from ABC Bank, 25,000 Rand. Therefore, we said that once again, our bank was going to be debited because it increases with 25,000 Rand. Bank is an asset. Therefore, it increases on the debit side and it decreases on the credit side. And then we have our other account called loan, which is a liability. And we mentioned that liabilities increase on the credit side, and when you pay them off, they decrease on the debit side. So now we had started in the previous tutorial with our third transaction, which was that we had acquired an asset for cash. So let's quickly go and have a look at the effect that this transaction would have on our T account. So firstly, the asset that we bought was equipment over here, right? And equipment is an asset. Okay, just gonna quickly highlight it. Okay, and it was for 100,000 Rand. Okay, and I said in the previous tutorial that don't be alarmed if they said that they paid by check, because when the check is eventually cashed, the impact is that your bank account will decrease by 100,000 Rand. So it's the same thing as you having paid 100,000 Rand instantly, even though you paid it by check and not by cash. So let's quickly go have a look at our T account. We bought it cash, so therefore our bank account would decrease with 100,000 Rand, right? Because we bought something. So just like when you go to the shop and buy something, your bank account decreases. So our bank account of the business is also decreasing with 100,000 Rand. Then we said that the other leg is that we bought equipment. Okay? And equipment is an asset, which means, just one second, that it will increase on the debit side and it will decrease on the credit side. If you look at this equipment account, all that it means is that every time we buy equipment, our equipment gets more, so therefore it is being debited. And every time we sell equipment, our equipment gets less and therefore it's being credited. So in this scenario, we bought equipment because they said we purchased, right? So therefore, I am going to go and increase my equipment with 100,000 Rand. So if you have a look at this transaction, right, we have a debit, which is our equipment increasing, which is over here. And we have our credit over there, up, which is our bank account decreasing because we bought equipment. So just a quick summary, transaction 3, we bought equipment, right? Bank, once again, is an asset. And then we bought equipment. Equipment is also an asset. Cool. Let's go have a look at how we will document this or record this in our accounting equation. We bought equipment, so therefore 100,000 Rand, right? I'm just going to put a plus here, no, sorry, it's a minus because we bought, apologies, we bought, so our bank decreased, it's a minus. Okay, Excel is acting up. So 100,000 Rand, I'm going to put here it's a minus. And just in the previous question, right, I'm going to go put here. Let me just increase the font so you can see quickly. Okay, I'm going to go put that when the T-Tom had deposited 100,000 Rand into our bank account, our bank increased. And over here, when we had gotten the loan, our bank also increased, okay? And then over here, when we paid for the equipment, our bank decreased with 100,000 Rand. There we go. So our bank is decreasing with 100,000 Rand, and my description is bank. And then what did we buy? We bought equipment, which is also an asset. So we're going to stay in the same place, except we're going to have a plus to show that it's, okay, just format that quickly. We're going to have a plus to show that it is plus 100,000 Rand. Okay. And what happened? It's equipment that was purchased. Cool. So, if you go back to your accounting equation, we have a debit, 100,000 Rand plus 100,000 Rand equipment increases, okay, which is over here that I just looked at. And then we have our credit, which is our bank account decreasing with 100,000 Rand. Let's see if we can do another quick transaction. Let's have a look. They say buying assets on credit. So what happened? It's just like the previous example. We bought assets, except this time we bought furniture and we bought it on credit, which means that our bank account is not affected in any way because we did not buy cash. They said we bought equipment for 2,000 Rand from Jock Limited. So let's go have a look at our T account. What happened? Remember, we bought furniture, right? Furniture is also an asset. So I'm just going to create an account here. Right? We bought furniture, so therefore it's going to increase on the debit side. How much did they say it was for? It was for 2,000 Rand, right? Just going to highlight that so you can see where my debit and my credit lies. And what did they say? They said we bought it on credit, which means it's a liability because we owe. I'm not going to use this account because I've named this account Loan ABC Bank. So I'm just going to open a normal creditors account that we're going to record all our other credit transactions, right? Remember that your liabilities increase on the credit side. That is when you buy more on credit and they decrease on the debit. They decrease on the debit side. That is when you pay off your credit. In this case, we bought more. So our liabilities are increasing, which means our creditors are increasing. So I'm going to put you up 2,000 Rand because we bought. And if you have a look at my blues, there lies my debit, which is my furniture, which I bought, which is increasing. And there lies my credit, which is now I owe more. And therefore, our liabilities is increasing. So just a quick summary over here. Furniture. I would advise you to just make a note of all these accounts and their classifications because it will help you when you see them again to know whether they're classified as an asset, equity, or liability. So furniture is an asset, which means that it increases on the debit side and decreases on the credit side. And then we're going to have our creditors account, or as it's known nowadays, which is our trade payables, right? So when you see trade payables, know that they're talking about creditors, all right? Just going to shrink that a bit. Trade payables, okay? And that is a liability. Okay, so let's do a quick recap. In the first transaction, let's go have a look at the effect we'll have on our accounting equation. So what did we say we did? We said we bought furniture on credit for 2,000 Rand, right? So we're going to have a plus here, right? I always do that. Furniture, right? Okay, before I put furniture, I should have put the amount. It was for 2,000 Rand, right? So the plus actually relates to the amount. Okay, and then what happened? It was for credits. So I'm going to put here 2,000 Rand, and that is, first we must check which side it is. Remember, it's credited because it's increasing, we owe more. So it's plus 2,000 Rand, and it is creditors. Okay, I hope this makes sense. I hope the last 3 transactions that we've done make sense to you. See you in part 3 of our accounting equation.